Good morning, good morning, good morning. Welcome to today's slightly earlier than scheduled morning blast with myself and Mr. Brown Shoes himself, Mr. Michael Brown. It is Thursday, the 8th of May, all day. Before we crack on and give you a well, not so rapid anymore, it's half an hour, but give you a roundup of the trading day, a review of yesterday, and hopefully put a smile on your face. It's not all up on your face, fatty? I'll get the legals out the way. As usual, nothing discussed in this space is set and constitute trading or investment advice or infers any kind of endorsement by PIQ, trading as PIQ Group or PIQ Group Limited, etc., or indeed the host, which, as you know by now, is myself, Mr. Ryan Paisley, and of course, Mr. Michael Brown. How are you?
Yes. A very good morning, Ryan. Good morning, everyone. Good morning to our Kildare correspondent as well. I'm all right, thank you, mate.
He's seen the light and he's left Green Island for even better southwest of England. Although he's no longer in Somerset, he's in Devon or Dorset, one of the inbred ones next door. Yeah.
I'm not even going to go where I was going to go with that one because we would get taken off air. Should we
No,
crack
and
on?
also respect my West Country heritage, please.
Your yokel roots.
Indeed. Right. What happened yesterday, my dear friend?
Indeed. Well, yesterday there was a small matter of the May FOMC decision, which we'll get on to momentarily, but safe to say that it was not a particularly huge market mover, though we did see equities closing higher on the day, with the S&P 500 and NASDAQ both adding about 0.4%. Sounds positive, but actually considering that both of those were up by well over 1% intraday on the news that the US and China were going to be holding some trade talks in Switzerland over the weekend, it's probably not the most convincing of rallies if you are a short-term bull. In terms of the Treasury complex, really not too much going on, to be completely honest with you. A little bit of firmness at the long end, the 10-year ticking a couple of basis points lower, the 30-year coming back below 4.8%, but the market very much taking the FOMC decision in its stride. The same can be said for the foreign exchange market, with most G10s, well, really going nowhere whatsoever over the May Fed meeting, but we have seen some dollar firmness creeping in this morning, with the dollar index rising north of the 100 figure, cable pulling back below 133, and the euro coming back below the 113 mark. In terms of gold, which I have to mention this morning, although sadly it is bad news for our man in Ireland, the yellow metal down by 1.5% yesterday and down by another 0.5% early doors this morning, trading down below $3,350 an ounce. That probably guarantees he's never going to listen again. In terms of the fundamental developments yesterday, I will get on to trade momentarily, but before doing so, let's just round off what Powell and his colleagues had to say yesterday. Of course, the FOMC maintaining the target range for the Fed funds rate between 4.25% and 4.5% as expected in what was a unanimous vote, also bang in line with market expectations, with the pace of quantitative tightening also remaining unchanged at $5 billion worth of Treasury per month after the Fed cut that redemption cap last time out. In terms of the accompanying policy statement, it was by and large a sort of carbon copy of what was issued last time out, although there were a couple of notable tweaks. The first is that the Fed maintained their description of economic growth, noting that the economy continues to expand at a solid pace, and really explaining away the recent weakness in GDP as a result of what they call swings in net exports, which is very, very much true, as we've mentioned numerous times on this program. But it's interesting to see the Fed sort of brushing that under the carpet in such a manner. Perhaps the FOMC don't see any sort of underlying economic fragility at this
Yeah,
moment
you know
in
what?
time.
I thought Powell conveyed that very well, as he said, to the people not listening at the back. The reason why GDP was so bad was because of all the imports, and
Mm.
the likely effect of that is that the next GDP print, or at least the one after that, will probably reverse that. So, and he very clearly said, rightly so, that we can't really make any forecasts when we don't even know how the dust is gonna settle. So, again, I personally, I know everyone loves hating on central bankers, as we always say, but personally, I think it was a decent press conference. He didn't say anything to rock the boat, which we don't want him doing, and he just laid it on the table, which is
Mm.
exactly what we wanted to hear.
Yeah.
He wasn't guessing. People are, as usual, social media were all over him saying he's doing shit and all this stuff, but in all honesty, what the fuck do you want him to say? You know,
Oh,
we don't
quite.
know what's gonna we don't know what's gonna happen today. Like Trump's proposing a new, potentially there could be a UK deal coming today, tomorrow. We've got all that geopolitical stuff kicking off. Trying to get a central banker to pin down exactly what they think is going to happen in the next 3 months is ridiculous.
No, no, you're absolutely right. We'll get on to that press conference in a second because the other notable tweak that the Fed made to their statement came in terms of an acknowledgement of the rising danger of stagflation within the US economy, noting that and I quote here, the risks of higher unemployment and higher inflation have risen. That was quite a notable change from the prior language around the dual mandate, which was simply saying that they are attentive to risks on both sides of their dual mandate goals. In terms of that press conference, as you said, Brian, Powell very much playing things with a very, very straight bat indeed. I think if he had the option, he would have chosen not to hold a press conference at all yesterday, because frankly, there is nothing that he can really say at this moment in time. And all of his remarks were very much sticking to what is now an incredibly familiar script,
Yeah, and
noting
he
that
wore
the
a purple
current.
tie. Well, no,
And he
sorry,
did wear a purple tie.
dark lilac.
Dark lilac,
Forgot
bloody
my
hell.
Patone color chart out.
Well, in that dark lilac tie, Powell reiterated that the current policy stance is well positioned and that the Fed are able to respond in a timely way to economic developments. While he also reiterated that if those dual mandate goals come into tension, so if we see higher unemployment and higher inflation, the Fed would respond to that by gauging how far the economy is from each of those goals, how long it would take for each of those goals to be achieved before then determining an appropriate policy response. Nothing too interesting in that. And of course, Powell didn't have any comments whatsoever on what Trump's been saying about how badly he's been doing his job, which one is complete nonsense from the president, and two is absolutely the correct response from the Fed chair. One thing that I did think went a little bit under the radar, though, at the post meeting press conference, and this is something with perhaps slightly longer term implications to consider, is firstly, Powell noted, and I quote here, he was talking about the rate cuts that the Fed delivered last year, which obviously started in September. And he said, if
That
anything,
feels
those.
like a fucking decade ago.
Oh, it really does. He said, if anything, those cuts came a little too late, which I thought was an interesting acknowledgement. He then said later on in the presser, that the costs of waiting right now are fairly low, but that the Fed can move quickly as appropriate when things develop. So I do just wonder whether there is perhaps a little bit of a case for a prolonged hold to say Q4, Q1 early next year, and then they throw a couple of 50 basis point cuts in the mix. Not a base case, but something perhaps worth
Wow,
considering.
that's I'm with you on kind of holding. I can see him holding fire, but to then say hold fire and then throw some 50s out there.
They
What are you
did it last
smoking?
year.
Yeah, but it doesn't mean history doesn't always kind of repeat, but or even rhyme sometimes at the moment. But that's ballsy cool, Mr. Michael Brown.
Well, like I said, it's not my base case, but I can see a scenario where that pans out. Anyway, that's enough on the Fed. They are clearly fully in wait and see mode, and I think they will be at the June meeting as well, to be completely honest with you. On to trade, of course, plenty on that front yesterday, and news from the White House. The first is, President Trump was giving an interview about 2 minutes before the Fed meeting because, no one can have the limelight other than him. He was asked whether the US would pull back on tariffs on China, the 145% tariffs, in order to bring China to the negotiating table. And Trump just turned around and said, no, we wouldn't. Sticking with trade, headlines out overnight that Trump is expected today at 3 o'clock in the afternoon UK time, 10 o'clock this morning on the East Coast. He's expected to announce a trade deal with the United Kingdom. This was picked up first by the New York
Whee!
Times. But before anyone gets too
Oh,
excited, the Wall Street Journal and actually UK officials this morning have noted that this is a framework or an agreement in principle and not a sort of full fat trade deal in and of itself. So it's effectively the UK and the US agreeing what issues they will discuss and how they will discuss them, and then those negotiations will take some considerable time.
basically they're confirming that they've agreed about a meeting about a meeting.
Yes, exactly. I mean, it's a bit sort of European Union-ish, actually, what's going
Oh,
on with
don't
this
say
one.
that. Don't say that. Don't say that.
There are a few things worth bearing in mind, though, when we get this announcement a little bit later on, because of course, one thing markets are going to be looking for with the first deal is, can it be used as a blueprint for other
Yeah,
deals? So I think that's the first thing to consider. The other things worth bearing in mind are. Is this a case of, what happens with tariffs? Obviously, the UK is still subject to a 10% baseline tariff on exports to the United States. We don't have a quote unquote reciprocal tariff here in the UK because we don't run a trade deficit. But the question is, does that change? Does that 10% get
yeah,
altered by what is agreed today? Again, that could set a precedent for other deals that may or may not be done during the remainder of this
yeah.
90-day pause. And slightly selfishly, I'm also just keen to see whether there's any mention of the Gulf, because one of the things that the press have been saying, one of the things that the press have been saying Trump is really keen to include in these trade negotiations is a commitment to get the Open back at Turnberry, which obviously he owns. So I'm just curious to see if there's any news on that front.
Yeah, I can see your point. Just on that as well, I think the important thing to think about, on this is there are many saying that, to coin an English term, that these trade deals will be like buses. We wait ages for one, and then once that first one's over the line, then they all come along. So that you're looking at golf. I'm looking at how kind of boilerplate this agreement is, because if we look at it and it's very much a boilerplate kind of framework that can be applied to A, B, C, D, E countries, um, then I think that's very promising for the next kind of month or so,
Mm.
because it means roll out. However, if it really is a granular kind of approach to, bespoke fit for the UK, I don't think that bodes very well for getting more trade deals across the line in short order. And I think that's when we could see this play on this 90 days being extended. But no, I think it's promising signs. I think depending, how boilerplate it is, the more boilerplate it is, I think we'll get more of a rally a rally in risk. But yeah, it's an interesting one. Again, if it is basically, you won't get any tariffs if we can play at Turnberry, then that's not going to be any good to China.
No,
So
it's really not, is it?
no, exactly that.
Oh dear. A couple of other bits and bobs on trade before moving on. For news out from the FT yesterday, the European Union, of course, they are coming up with this list of products that they might throw tariffs on if talks with the United States don't make any progress before the 8th of July. One of the things that the EU is apparently looking at is potentially Boeing, including civilian aircraft, which could be included on this list. That is particularly of note for Ryanair, actually, who are, I think they're Europe's biggest airline, and they have an all Boeing fleet and plenty of orders on the order book. So one to bear in mind for them. And lastly, on trade, HSBC, they have launched effectively an expansion of their trade finance product, which means that they're now giving companies credit lines in order to automatically pay import duties under their existing import and export finance agreements. The only reason I mention this is because it could potentially sort of smooth out, not necessarily soften, but potentially smooth out the blow that may be inflicted from tariffs. Obviously, we were talking about a sort of sudden stop in terms of economic activity. If other banks go down this path, then it could help businesses to adjust. So one to keep an eye on there. In terms of other bits and bobs from yesterday, we did have news just after the Fed presser last night that President Trump is going to be rescinding these global chip curbs. Now, before anyone gets too excited about this is nothing to do with the recent tariffs and trade nonsense. This actually goes back to the chip curbs that were proposed right at the back end of the Biden administration and that were due to take place actually a week today. If you recall, they would have split the world into effectively three tiers and put various
Yeah,
quotas on which US chips can be exported to which countries. A lot of companies like Microsoft and Nvidia were rightly saying that all this is going to do is send countries in the lower tiers to go and get their chips
yeah.
from China. So that has
This
been put on hold. Just lastly on that, it is, though, going to be replaced with a system of Trump's own design. So do
Yeah.
bear in mind that
So
hasn't gone
on this,
completely away.
this was a fantastic example for headline traders, the pitfalls of being a headline trader, because Bloomberg ran the headline first on the terminal, and you look at that headline and it read completely like it was related to the current tariffs and the current situation. So you obviously, that's why we saw a rally in kind of in chip names and stuff like that, like a serious rally in chip names. However, if you were one of the few people that then dug deeper and realized, hang on a second, this has nothing to do with the current
Mm.
trade situation, you would then, mentally you go, okay, well, hang on, this is wrong. This rally is wrong. I'm going to take the other side of it. I'm going to short it. You'd have done your ass. So this was a great example of kind of ignorance is bliss, because those people that probably woke up this morning still not knowing the intricacies of it would have made a killing if they were headline trading and just jumping in, jumping out. However, if you did know the truth and you knew and you actually read the article, you could have done your ass. So what a brave new world we live in. But yeah, good luck doing that.
Yeah, the other thing I would say with that is it just points to how desperate, frankly, the market is to jump on anything that even looks like good
Yeah,
news and has the word Trump in it.
yeah, no, exactly. But yeah, to an extent, but I do think, this kind of form of headline trading has been around for a lot longer than,
Mm.
Trump. But yeah, I think, the market's so poised for good news or any news that anything like this, which was a very clear headline. And this is the thing, if it was related to the current situation, it was a very clear headline to trade. And that was kind of the annoying thing for anyone that was trading it, because yeah, it was a beautiful headline to jump on the back of for chip names and semiconductor index and whatnot. But it was referring to a completely different set of tariffs and
Yeah.
sorry, sanctions or whatever we're going to call it.
Yes, quite. In any case, moving on from that, just a couple of other bits and bobs from yesterday before I hand back to you, Ryan. Disney, they're going to be launching their first theme park in the Middle East. They're going to be building a theme park in Abu Dhabi. Apparently, their Imagineers are currently in the process of designing that resort and its attractions, and they haven't decided how much it's going to cost yet. But one to keep an eye on for any fans of Disney out there. And I assure you that that is not from any sort of Mickey Mouse source. That is reliable news. Um,
No.
Sorry.
Oh God.
Lastly, two headlines out of China. The first is that the Chinese added to their state gold reserves for a sixth straight month last month. Obviously, we have seen notable Asia buying demand for the yellow metal for quite some time now, and it seems like a lot of that is coming out of China. And last but by no means least, because I really don't want to have to pronounce this one again, but we heard from Chinese state media outlet
Oh yeah.
Yuan Tan Tian yesterday, and they
Paint
said,
me the eyes.
whoever they are, oh God, they said, whoever they were, that China has at least 2 to 2.5 percentage points of room to further cut the
Yeah.
reserve requirement ratio, and that Q2 exports may be impacted by the trade war, so the need and urgency to cut Triple R has increased. The reason I mention this is because, one, when Chinese state media are sort of rolling the pitch for dismal economic data, it gives you an idea of how bad even those fake
Yes.
manufactured statistics are likely to be. Secondly, it again points to the idea that China are sort of battening down the hatches and digging in and preparing
So,
for
yeah.
a prolonged trade conflict.
So I said exactly this yesterday on the Grey Market Blast with our good friend Angie, that you know this announcement yesterday and all this stimulus that got announced yesterday from China came hours after they'd agreed to. It became public that they'd agreed to meet Trump's team in Switzerland.
Mm.
Um, so if you kind of think that it's going to be a promising meeting at the weekend or whenever it's their meeting, you wouldn't then hours later really unleash the taps on the stimulus front. So yeah, and China were very clear that their position hasn't changed, and they're only meeting the Trump people because it was requested by Trump. So yeah, anyone looking for, we're not saying it's not going to be some positive headlines come out of it, but anyone expecting that China and America to walk away from this meeting in Switzerland, holding hands, skipping down a road, I think they're very much mistaken. But anyway,
I
um,
agree. Well, that's all from me for the moment, at least.
cool. Well, thank you for that. Some overnight news headlines some from Zach, some from Reuters, because it was a bit early for our dear friend Zach. Unfortunately, couldn't get him out of bed this morning.
Slacker.
But
He's not even on the
exactly,
call, is he?
exactly that, exactly that. When you text me last night and said, "Can we have an early blast?" I wondered where this was going. Turns out there's a 7:30 in the morning. But anyway, starting with trade. As we've alluded to, US and Britain to announce major trade deal on Thursday, boosting global market optimism. Trump has also signals that China initiated the trade meeting, although we've already heard from China that Trump initiated the meeting. So an interesting one. Washington is eyeing to stroller off. To eye stroller tariff exemptions. So this came out last night. So anything to do with like kids stuff, like car seats and stuff, they're looking to exclude that. I guess it makes decent headlines that if you're stopping people affording decent car seats, it's not going to bode well, is it?
Well, it's certainly better than the headlines at the weekend where Trump was going around going, "Kids don't need 3 dolls; they can get by with one."
Yeah, exactly. And how is your doll? Is she inflated?
I knew you were going to go down that
Bosh.
road.
Right. Anyway, moving on. US to seek UN sanctions to ships. On ships transporting North Korean coal to China. Trump is also set to sign an executive order on drug prices as early as next week, targeting cost reductions. In macro news, the Federal Reserve hold rates steady, as we know, sees rising economic risks amid tariffs concerns, as we know. As Michael's going to allude to a lot in a second, Bank of England is set to cut rates. Brazil's central bank hikes rates by 50 basis points to a near 20-year high, signals data-dependent path. PIMCO warns of heightened US recession risks. No shit, Sherlock. South Korea's FX reserves dropped to a 5-year low due to market stabilization efforts. It costs to keep your currency where you want it to be. Bank of Japan divided on US policy impact on rate hike timing. That's according to their March minutes. New Zealand to boost capital spending in key sectors for the upcoming budget. UK house prices. The balance falls to a 9-month low in April after tax breaks ends. Moody's flags risks from rising retail exposure to private credit markets. India's strike in geopolitical news now. India's strike on Pakistan marks the worst fighting in over 2 decades, escalating tensions. And we did hear last night or early this morning, depends on where you are, blasts heard in Lahore amid heightened Indian-Pakistan tensions. Iran's foreign minister calls for restraint, rich coming from him in the India-Pakistan standoff. Trump is hoping that India and Pakistan halt the tit-for-tat conflict after recent strikes. Moving further in towards Asia, North Korea fires a short-range missile, possibly testing for export markets. Philippines and China, they trade accusations over aggressive South China Sea confrontations. Chinese premier is to visit Malaysia for the ASEAN Gulf Summit. Strengthening regional ties. We've seen a lot of this from China recently, as kind of Trump is pushing that kind of area to one another. There's also been more further talk I saw in the last couple of days, potentially Japan, China, and South Korea not kind of joining forces, but at least agreeing in principle to some of the same frameworks to kind of counter Trump's proposals on tariffs, etc. So an interesting one, given how much they hate each other. Zelensky has reaffirmed Ukraine's offer of a 30-day ceasefire despite ongoing conflict. And finally, in geopolitics, the Taiwan president warns against indulging aggressors on the World War II anniversary. And finally, just some equity news from me. Toyota projects a 21% profit decline for fiscal year 2025 as tariff impacts earnings. AB InBev, their Q1 profit more than doubles forecast, driven by strong sales. Kongsberg, their Q1 profit soars on surging demand for defense systems. That's kind of an ongoing story there, especially in Europe. I did see that yesterday. There's on the Norwegian sovereign wealth fund, as we know, the biggest in the world. There is a line in the mandate of that it can't invest in defense. And apparently, the Norwegians are looking to remove that line to buy into the defense sector. So that'd be another bid coming into the defense sector, the European defense sector, at least you'd imagine, like Rheinmetall and all of that lot. One to keep an eye on. Corteva beats Q1 profit estimates boosted by higher seed pricing. Obviously, that's the seed magnate. DBS tweaks 2025 guidance after Q1 profits exceeds expectations. Bumble forecast Q2 revenue below estimates despite solid Q1 performance. Not the first time you've had a solid performance on a Bumble date.
Oh, God.
Beyond Meat, speaking of which, withdraws annual forecast as US faux meat demand weakens. Yeah, that's a good point, actually, because Remember when they were everywhere, this Impossible Burgers and all that?
Yeah, yeah, yeah.
Not that I've ever tried one, because I'm a red-blooded male. But yeah, I've not even seen that on the shelves recently. Arm, the chip name, their shares dropped 11% after forecasting lower Q1 revenue and withholding full-year guidance. Again, another company withholding guidance. The market seems to be reward. Even if your guidance isn't great, the market definitely rewards you for at least putting something out there. We've seen a lot of firms this earnings season just withdrawing all guidance entirely, which does not bode well. Nutrien misses Q1 profit estimates due to lower potash prices and delayed field activity. And finally, for me, AMC Entertainment reports lower revenue amid declining theatre attendance. Get your popcorn ready for that one.
Oh dear. Oh dear. Oh
Um,
dear. Oh
it was a
dear.
bit laboured, I apologise, but it's early. But anyway, back to you in the studio.
Indeed. Right. Moving on. In terms of today, then, as Ryan just alluded to, we do have a continuation of the central bank bonanza at 8:30 in about half an hour's time. We hear from the Riksbank in Sweden. They are expected to keep rates unchanged at 2.25%, although markets price a very modest 1 in 10 chance of a 25 basis point cut. But the Swedish policymakers overall likely to remain firmly in wait and see mode. Half an hour later, at 9 o'clock this morning, we hear from the Norges Bank in Norway. They are also set to hold rates steady at 4.5%. In fact, they haven't actually delivered a rate cut yet this cycle, and the market doesn't price them doing so until August. There are no new forecasts due from the Norges Bank today, so they are likely to simply reiterate their prior view that rates, and I quote here, will most likely be reduced in the course of 2025. Moving on to the main event of the day, and that is, of course, what's happening just down the road on Threadneedle Street with the Bank of England announcing their latest policy decision on Super Thursday with a slate of economic forecasts due as well. Do bear in mind, of course, that the BOE decision statement, vote split, minutes and forecasts will be released 2 minutes later than usual today at
Yes,
12:02 p.m. That is due to the national 2 minute silence for VE Day.
yes,
So well done to the bank for doing that. In
agreed.
terms of expectations for the MPC later, we are expecting the bank to deliver a 25 basis point rate cut, and that would lower bank rates to 4.25%. The vote is likely to see all 9 members of the MPC in favour of a rate cut, though there is likely to be some dissent over the appropriate magnitude of that cut,
Oh,
and you would expect at least one of the external members, probably Dingra, to vote for a larger 50 basis point reduction. She may be joined by either Catherine Mann or Alan Taylor in
well,
that
an
dissent.
important thing to note on this, and very well noted, Mr. Michael Brown, is one of the figures one of the economic pieces of data we get through when this all drops is voters for a cut, and then also we get voters for a 25 basis point cut. It's very easy when you see like 7-2 to think
Mm,
two people voted to keep rates the same, but it's not. It means that if we see any dissenters, they'll be looking to cut more. I'll be shocked if
yeah.
anyone didn't want to cut. So this will be one to actually look into what you're actually reading when you're looking at the data, if you are that granular.
Yeah, no, that is a very, very good point. And I think it
Oh,
is
stop it.
important to look at that vote split today, particularly
Yes,
when the
definitely.
rate decision is basically
Yeah,
locked
I
in.
agree.
The other key areas to focus on today are the Bank of England Monetary Policy Committee's policy guidance, because there is a high expectation that the MPC will indeed open the door to a more rapid pace of easing this time around. Of course, the BOE have effectively been delivering one cut per quarter since last August. Since the start of the year, inflation has come in below the bank's expectations. Also, downside growth risks have increased as a result of the tariffs that have been put in place by the US administration, and they will also have a disinflationary impact on the UK economy. There are two really important lines to focus on within the MPC's policy statement. The first is the description or the language used to describe the pace of easing. That is currently described as, and I quote here, gradual and careful. If they tweak either or both of those words, then that would be a nod towards a more rapid pace of cuts moving forwards. The other line that has been used by the BOE for quite some time now is that policy, and again I quote here, must remain restrictive for sufficiently long, and that is a reference to removing or reducing the risks of inflation persistence. Again, a removal or a tweak to that line would be another nod towards a more rapid pace of policy easing moving forwards. We do, of course, have a new round of economic forecasts from the Bank bank today, although do of course bear in mind that they will not make any account for the trade deal that has reportedly been agreed by between the United Kingdom and the United States. Those forecasts, in short, are likely to show a lower GDP growth path, a higher unemployment rate path, and also a lower inflation profile through that forecast horizon. Just for reference, back in February, the BOE saw inflation peaking at 3.7% this year before returning to the 2% target in the fourth quarter of 2027. That 2% target is likely to be pulled forward in the latest forecast round. In terms of the governor himself at the press conference, he's very much likely to stick to his recent script, noting a focus on the quote unquote growth shock from the tariffs that have been imposed, and also a desire to ensure that the hump in CPI does not translate into any sort of persistent price pressures. In terms of market pricing for the BOE today, we see the OIS curve discounting around 27 basis points of easing, so a very, very modest chance priced in of a larger 50 basis point move today, while the curve also fully prices another 25 basis point cut by August, with a total of 96 basis points of easing seen by the end of the year. So effectively, the way to think about that is a cut today and then 3 further cuts before the end of 2025. In terms of other bits and bobs to keep an eye on, we do have some data out of the States later, the weekly initial jobless claims data and continuing claims, of course. Neither of those prints pertain to the May non-farm payroll survey week, but given that last week we saw initial claims at their highest level since Feb and continuing claims at their highest since 2021, perhaps the data bears a little bit more attention than usual. We also get unit labour costs and productivity figures for Q1 out of the States today as well. In terms of other bits and bobs, just lastly, because we are a little bit over time, we do have a 30-year auction out of the States today, $25 billion worth being sold off at 6 o'clock this evening. We're also due to hear from, obviously, a whole host of BOE speakers. The Bank of Canada's Tiff Macklem and Deputy Governor Rogers will also be speaking, albeit on the issue of financial stability. And then in terms of earnings today, we hear from Peloton, Shopify and ConocoPhillips before the market open. No need for a crude pun with any of those. And after the market and after the market close, we hear from Coinbase and Cloudflare, and of course focus on trade as well ahead of that UK-US agreement announcement later on today.
Awesome. Thank you very much, Mr. Michael Brown. I know you got to shoot, so I'll wrap this up quickly. Listeners, thank you as always. If you are tuning in at 8:30 to listen to this, see you later, suckers. From me,
we'll be back to that time tomorrow.
Yeah, exactly. From me, myself, Mr. Michael Brown, Mr. Michael Brown's inflatable doll, we wish you a fantastic trading day, and we'll see you tomorrow. Peace out. Much love.
Bye for now.